Hi there, this is Alvin from Dr. Wealth. Today's topic is about Moat Stocks, or MOAT in short. So this is a concept whereby it was influenced by Warren Buffett, and there is an ETF called the VanEck Morningstar White Moat ETF, which an investor who love to buy this kind of high quality business with strong competitive advantage can just consider buying a whole ETF. And you don't need to do the work to analyze which stocks are actually having that competitive advantage. But today I want to go deeper than that, right? So in this ETF, there are actually 50 holdings, and we know that we are in the midst of a correction. So I thought that maybe there are some moat stocks that are more undervalued than the others. So I went to screen through these 50 stocks and look at them which are actually trading at a 1-year low. I managed to find 4 of them, so I'm going to share with you which 4 are this stock. The very first one is this Market Access, MKTX is the ticker. So this is a bond trading platform. As we know, most of the bond trading are still done over the counter. You need to call a banker to get a quote of the bond prices. And if you call different banks, you might get different prices. So it is very unlike stock trading where the stock prices are a lot more transparent, which are presented by the exchange and relayed by the brokers to the investors themselves. So there's a centralized dealing platform. But as for bonds, there isn't. But this is where Market Access is trying to change the way that bonds are traded. So they're trying to make it more transparent for the bond pricing. And increasingly, more bonds are being traded electronically than via the phone. So that is where Market Access is trying to grow its business. And of course, there are some issues that it is facing right now. The very first thing is that I noticed its revenue growth rates has slowed down, and its 5-year compound annual growth rate is just 4% per year, which doesn't sound like a very fast growing kind of business. And it is mainly due to competition from Bloomberg, from ICE, from TradeWeb, as well as TrueMeet. So these are some of the competitors that have come in and taken some market share as well. But this Market Access remains a market leader for US high yield bond trading, right? So it still have a niche that it has some commanding position in. And lastly, it is still a very highly profitable business with 34% profit margin. This margin is not very common compared to a lot of other companies. So this is an envious position, right? Despite growing slower, but profitability has stayed very high. And let's look at their share price. This is the stock chart, and it is trading below the COVID low. It has corrected more than 50% since the peak of about $580. Now it's about $215 at the time of recording. But analysts remain optimistic, right? Even though the general consensus is on a hold, but their price target is about $278, and for Morningstar valuation is actually higher at 305. Right, so which means that there is still some upside. Maybe the share price have overcorrected. It's not just at its 1-year low, and it's nearing its 5-year low. So there may be a rebound that may be coming in the near future. The second one is Pfizer. This should be a very familiar pharmaceutical companies in everybody's mind because we're just fresh out of COVID, right? It is one of the key companies that have produced the COVID vaccine. And Pfizer is not just a one-hit wonder, right? So you can see it actually have a portfolio of drugs like Eliquis, Comirnaty. So quite a lot of this contribute significant revenue, right? The top 7 drugs actually contribute more than 50% of revenue to Pfizer. Some evaluation of their situation right now, and because the COVID-19 revenue and profits have driven so much of Pfizer in the last few years, it is very difficult to get better than that. As we know that COVID effects has been tapering, there are less people taking doses, and that's why revenue has actually dropped 23% from a year ago. It is a high bar to overcome, right? Suddenly this booster drug is no longer bringing in the revenue, which is a good news because we really want to get over the pandemic and don't want to look back. Okay, so future of pandemic, which is Pfizer, is of course now trying to stabilize its financials. And we also understand that they have 7 drugs that contribute to more than half of their revenue, so which means that it is not a one-hit wonder. Right? So Pfizer, even before COVID, has been generating good amount of revenue from a diverse portfolio of drugs. So it is not just because of COVID it made a hell of money. And lastly, it also remains as one of the most important and biggest pharmaceutical companies in the world. So it cannot be replaced overnight in that sense. And this is their share price movement for the past 5 years, and you can see that the gains that they made during COVID period has already been given back every single cent. So it's back to the 2019 kind of a share price. And we also understand that revenue and profits are definitely higher than 5 years ago, and yet the share price is trading at the same place. So it might suggest some undervaluation over here as well. In terms of the analyst projection, Morningstar valuation is about $48. The rest of the analysts were projecting about $44, and they made a buy call for this. So this is the second stock trading at its 1-year low. The third one is Estee Lauder, the ticker is EL. So this is a premium cosmetic beauty company. I think if you ask any lady, they will have heard of this name. But they're not the mass market kind, right? I know that there is a new brand called the ELF Beauty that is very popular, and it's garnered quite a number of fans. The share price has been performing fantastically, but they are not competing at the same level. Estee Lauder is the more premium version. And if you look at the fundamentals, it doesn't look good as well, right? Because the revenue has dropped 10% in FY 2023. And the reasons were understandable, right? The first is that especially the Chinese tourists have not really gone out of their country. Domestic travel in China has picked up, but not outside of China. And of course, then the purchases of all these duty-free cosmetic perfumes were reduced as a result, since tourists from China made a very big part of tourism revenue in the past before the COVID pandemic. So even in the US, where the pandemic effects has already worn off, but yet the sales has been poor in the US. And the reasons that were given were due to fears of inflation and recession. Some of this pressure caused the US consumers to be more mindful about their spending, and probably work from home, right? You don't need to put so much makeup. The demand for these Estee Lauder products dropped as a result. That said, Estee Lauder remains a very renowned brand when it comes to beauty products. And you also have a portfolio of valuable brands that it can appeal to different segments of the market as well. So don't write it off yet, okay? And in terms of the share price, it is near its COVID low. Okay, that also suggests that if anyone who have missed the bottom of that COVID and the eventual rebound that we saw in 2021, 2022, Estee Lauder has been actually doubled its share price, and now it has came back down, right? It's again dropped more than 50%, which may present another opportunity for investors to consider. And in terms of the valuation, Morningstar valued it at about 249, and other analysts made a buy call in general, and price is at 192. Okay, so there is still a significant upside if the price indeed hit these levels. Now let's come to the last one. Number 4 is RTX Corporation. You might not be familiar with it, but if you recall, there is a defense company called Raytheon. This is the new brand name, which is also inclusive of some of the companies that they have merged with. So RTX Corporation is made out of mainly 3 companies. One is Collins Aerospace, second is Pratt & Whitney, and then third is Raytheon. So let's dig into their business a little bit, especially in recent times what has happened. It is usually a very resilient business, right? Because they are selling critical components for defense or aviation businesses, where the recurring revenue income is very sticky. But why is the share price trading at 1-year low? Is because likely due to the Pratt & Whitney engines issues. Okay, so the engines were being supplied to the Airbus A320 series of planes, and recently they found that the material that they use that may be easily cracked, and that doesn't sound good for aircraft engines, right? And which means that now they are trying to move forward the maintenance check to make sure that these materials are still intact and there's no signs of cracks. And at this point in time, these A320 Neo series of airplanes are still flying, right? It's not that they're all grounded and they're just moving forward the maintenance schedule. So it's nothing that is a big hoo-ha. It's projected that they may lose $3 billion, but their market cap has dropped more than $3 billion. So the drop doesn't really commensurate with the fundamental changes. I think that this concern is a little bit overblown. And if we look at the share price, right, this stock chart shows you that it's actually quite resilient. It didn't go up a lot after COVID, but it also didn't go down much. Especially last year in 2022, we saw a lot of stocks went down. But this RTX Corporation didn't. It just was very steady and just range bound. in between about $80 to $100, right? And then suddenly this year it dropped, okay, significantly. It dropped like about 30% from the highs due to the engine issue that we talked about. But I think that is probably a little bit overstretched and overcorrected in this sense. There might be some investment opportunity here as well. So the valuation that's given by the analysts, Morningstar says should be 112, and the rest of the analysts gave a valuation of about $91.65. So of course, you want to be conservative, always use a lower number. So in summary, we are in the midst of correction, and I don't think this is a time to get worried. To identify some of the wonderful companies that may be trading at fair prices, if not undervalued prices. Hope you like this video. Give me a thumbs up, subscribe to the channel, and I'll see you in the next one. Goodbye.